Just chill out. You don't have to buy every single coin. You don't have to buy every single dip. You don't have to buy everything what each influencer tells you to do so, okay? You need to listen to this video because a lot's happening and I want to show you a few little things that you can do that may help you in the long run. So, standing still is usually quite a good thing. Reason why I say that is you can't get destroyed if you are standing still waiting for certain things to happen. Now, there's a tip here, and this is the first tip. Listen to this. Have some crypto and then have some money out of crypto just in case. Can't really lose then, can you? Don't be all in. Don't because of one YouTuber, influencer, whatever, may well be telling you to buy something when realistically you should be waiting. Apparently, the cryptocurrency industry is going to be worth over $200 trillion by the end of the decade. Potentially. It's speculation. But remember this, we don't know, right? So please do not make financial decisions off what I say or what you see on YouTube, okay? It's getting quiet. It's getting quiet. A lot less noises, a lot less voices. It's getting better. But today's video, we're going to talk about quantitative tightening. We're going to talk about the CPI figures that are due out today, very, very soon, as I'm recording this, pretty much. S&P 500, the corrections, where it could go on past recessions or crashes, right? And then we're going to talk about the obvious altcoin weakness, which I think are starting to show signs of weakness, and it's coming apparent with certain charts. Cool. Right. Let's go. Quantitative tightening. So from 2020, June, post-COVID and that crash, the government had to basically bail out a lot of people's investments, monies, business, etc., right? To keep things propped. What quantitative easing is that stimulus checks, belt feds, $9 trillion added to the balance sheet. They've got to get it back, which is what quantitative tightening is. So from as of here, basically, you can see this very, very clearly. If I can zoom it, boom it, there we go. From the 15th of June, it's going to be kind of impacted from that point, right? So we've already had the element that we're not buying bonds back, which is fair enough. But we are at 8.1% inflation, CPI figures of last month. We are expecting 8.3 today. I'm doing that before it has been announced, so I may well be getting a little bit of an age well sort of situation, but it'll be fine. Not much of a difference. But we've got to look at that as a fact. We have to do interest hikes. We have to bring back money out of the stock market, roughly 1.1 million per minute, until potentially the end of 2023. Huge narrative there if you're looking at halving cycles, just as a pointer there. Now, other things to look at in terms of quantitative tightening is that it's going to get more and more aggressive as the year goes on. So there'll be an element here, as you can see on this situation here, it's going to be starting off relatively calm, and then it's going to basically double from September. So it's going to get more and more aggressive. So, yeah, you're probably thinking, cool. If this, by the way, is over your head, sorry, there's links below to some courses if you want to learn a bit more. Or my Patreon, that'll help you too. So, let's look at the past. Right, I talked about this on Learning Crypto this morning on live. Thought it'd be a good thing to cover. This was essentially the dot-com bubble. This was the housing collapse in 2008, sorry, get the words out. And this is the COVID crash. I'm not going to highlight that because I don't think that was any recession. That was just a freak, right? A black swan. Now, these are 50% corrections and a 57% correction, right? On the S&P 500. Basically, the top, I think it's 509 top stocks, right? We need to, I know. You're probably thinking, this is a crypto channel. We need to look at this. So, the bigger crypto gets, right, the more important these metrics become. More institutional investments, more vehicles of wealth, ETFs, all kinds of wonderful stuff, interest in cryptocurrency, a hedge against inflation, or a place to put their money to make it work. Now, we may well be seeing this with the likes of BlockFi, with Nexo, with Celsius, all these other lending and borrowing platforms that a lot of institutions are borrowing against and actually shorting the market. That could be a thing. And I think that is a thing, by the way. So we need to look at that as a situation. The bigger this market gets, as I say, the more important this will be. Now, if we are going to do a 50% correction here, it takes us roughly towards the COVID crash kind of levels, right? All the way back to 2020, basically wiping out that push. Now you got to remember as well, just to give you a bit of a point here, from this point here, from literally from July time 2020 up to this point here, this was all quantitative easing, money getting belt fed into the markets, overextended, right? So it's a big problem. Now, as I say, we are going to be doing the opposite. What's probably going to happen? I personally think a recession. Now, how is this going to impact the rest of the market? Now, let me talk about one thing and one thing only before we go on. The dominance and the dollar dominance around the whole entire market. Basically, if you don't know what this is the dollar index. Basically, 5 to 6 different currencies against this, essentially the main ones, with like 24 different countries. You've got to remember there's 19 countries in one of these currencies called the euro. You've probably heard of it. So this is going to go up higher, much, much higher than you think. Why? Money's getting thrown out of the market into dollars. They're no longer spending their dollars to do the bonds and all kinds of stuff around the interest rates of credit and all kinds of money moving policies. So it's going to increase the strength of the dollar in the short term. A recession, though, will more than likely make things like this happen, where we just go boom, we will drop massively. So you can see here from 2016, 2006, all the way down into like the start of that recession and into what happened for the fallout in terms of the Greece bailout and all kinds of horrible stuff in Cyprus. Hugely important. Again, you look at the dot-com bubble, boom, you know, every single recession, there's always a dominance change in the dollar. So what will happen then? Well, usually what would happen is that money would go up, the dollar would increase, and guess what would happen? They would have to then do another rescue plan, won't they? Because the markets are on their knees. Therefore, the dollar will then drop. Therefore, then maybe trigger the next bull market in crypto. Cool. Anyways, moving on. So that's the basic stuff, right? But let's talk about altcoin weakness, right? I think this is hugely important. Let's talk about dominance. Dominance of Ethereum right now. I think this is going to go much lower, personal opinion. The reason why I say that is just because of how the markets are looking right now. You know, if we're looking at this as an overall metric, it's looking pretty wishy-washy. And I think we are going to form a next leg going down into these levels. We will see where things go, right? Put it that way, it could be very, very interesting. But I don't want to look too much at that. I want to look at the BTC dominance. This is starting to retest some levels of interest where maybe you may find that certain altcoins are at levels of support and they may well bounce. But if they fall through those supports, that's going to go up. And as I said briefly, looking at the Ethereum dominance, we are at a critical level. If Ethereum loses this level and it goes lower, you'd probably bet your bottom dollar that the dominance is going to start streaking up massively, right? Which is hugely, hugely important and hugely, hugely dangerous for a lot of people. Altcoins at the moment are getting smashed, and let me prove it to you. Now, keeping it simple in USD, look at BTC, 5.64% down over the last 30 days, right? 27% for Ethereum, that's big, that's not good. Then you got the likes of BNB. Yeah, it's not doing too bad. So is Cardano. Bit of good news though coming out of those two recently. Maybe not BNB, there's been an SEC sort of thing, but we'll see. XRP, Solana, Polkadot, Dogecoin, Avalanche. Most coins are between 20 and 30 to 40% drops. Whereas Bitcoin's been stood still for 30 days, literally 5% down. Now, when we talk about that, well, it's 5%. But when we look at the S&P and the NASDAQ and all that kind of stuff, right? In the last 30 days, right? If we're looking from this point here, from April all the way down to the lows, like the stock market has dropped 13%, and from April, May, March time, Bitcoin hasn't really moved realistically. When you look at BTC from what's that date there? The 28th of March, right? We're looking at this sort of level here, where is it? About here, give or take. So we're only down, let's be fair here. Where is it? There. From that point there, 46,000 down to 30,000, right? It's not much in the grand scheme of things. Usually, if the stock market's going to drop like 20%, you'd expect Bitcoin to be a lot lower, in my opinion anyway. Certainly when you look at the metrics here. Now, it looks like a lot, 36, but you got to look at the past here. The S&P is a multi-trillion-dollar kind of thing versus Bitcoin, right? So you'd expect the volatility to be there, but For me, it's held up pretty well, personally, when you look at the past. When you look at the returns of investment versus what the S&P was, but yeah, cool. Double. I would have expected a lot more, but that's my personal opinion. Anyways, how to curb this and what the problem is. Well, the problem is you probably won't know that you're going to be bleeding out massively in BTC as the pairs very, very soon, right? So whenever we're seeing the altcoins have a bit of a wobble, it's looking pretty bad. Even today, you're looking at it like Bitcoin's down 0.3%. A lot of the altcoins in that main list on the bottom there, they're down quite a bit versus it, right? So the one thing that we don't want is this to continue going higher if you are holding your altcoins really tight. This is why I said at the start of the video, have some crypto, have some stables, because you will be able to find some opportunities very, very soon. Now, buying the dip, stop buying your crypto because guess what? We could go much lower due to this, due to all the other stuff I've just mentioned in this video. Money's getting thrown out of the market. It's not going to go back in anytime soon if people are panicking. Market sentiment, right? Not many YouTube videos around. No one's really liking or engaging in tweets. Money's coming out of the stock market. It's looking a bit precarious, right? Why would you do that? So let's just give you an example. Let's look at Polkadot. You all know that I love Polkadot, right? It's a fucking clear and obvious signal, right? We are down a lot, right? And I want to just leave this video on this one little note. I'm not going to try and scare you, but I want to kind of give you a little bit of a shock. This market can go anywhere it wants to go. You are not in control of it. No one can know the future. We've got to look at the past to get an idea of the future. If we're going to go from the past on Polkadot, we can identify a level of interest around where these levels are here. This big red ugly box around $5, right? Now, people will be like, oh, it's never going to go down that much. But realistically, right, from current price levels here on this level of support, and we do drop down to say $5, which is roughly around here. There we go. It's another 45%. It's pretty damaging. This is why I say to people, do not just blow your load on one level because you think it's undervalued, because you think it's going to just bounce. Just be careful. We are at a level where we are at a huge downtrend and we could go lower. Keyword is could. Do not spend all your money because said influencer is going to go to the moon or a certain release is going to happen. Remember your risk management. It's overrated in this kind of, not so much overrated, it's actually underrated to be fair. Like, no one really uses risk management. Be bloody careful. So that being said, $5, right? What about if it doesn't go to $5 and you miss out? Well, you don't, because you just buy when it starts getting a bit of a trend momentum, right? But the downside to this is, what about if it goes to 5%? $5. What about if it drops down another 45% from that point? Well, it can go all the way down to like $2. So be careful with what you do with your money in this market. Standing still can save you a lot of heartbreak. It really can. So watch the next video, might help you.